Hey everyone, welcome back to the monthly market commentary, month of September, which is crazy to me as I was getting my notes ready for our time together today, Tim. I wrote August at the top of my paper and I'm like, nope, it's September. But welcome back. I'm Brad Gotto, founder and CEO of Fiat Wealth Management. Here with me as always is Mr. Tim Holland, the Chief Investment Officer of Town Square Orion. Tim, I say it every single month and I mean it every single time. So I hope it doesn't lose its luster, but really appreciate you being here.
Yeah, no, it's good to see you. Hope you're doing well. Calendar pages turn faster and faster. Not to put you on the spot, but I understand you have a momentous occasion you're going to be celebrating. And before you get
Yeah.
into that, which is really neat, we dropped our daughter off for her first year at college a couple, 3 weeks ago.
Wow.
Yeah, 1 minute you're pushing them in a stroller, next minute you're crying like a baby on 90.
Hey, did you cry?
So this is how it went down for me. At the risk of oversharing, our daughter's going to school in Boston. She and I were in the hotel room. My wife, her mom, downstairs getting tea, and I looked at Grace and I said, "Grace, do you want the speech now or in your dorm room?" And she's like, "You are so weird." So I said some stuff. I cried a little bit, but wasn't too bad. And then the drop off wasn't bad. It was kind of hectic. You're running around and there's lots of people. And I told her I loved her 10 times and have fun, be safe. And I was like, wow, that wasn't as bad. And then we drove home from Boston the next day. I went to put some laundry away in her room, and it was like I got run over by a Mack truck. So just a bit of advice.
Yeah.
Your kids are grown, they all grow up so quickly. And everyone's different. The drop off wasn't that bad. When I got
Yeah.
home the next day, I was a mess. I really was. So it was the next day that got me. So
And so have you talked to her since then? Is she staying in
I,
communication?
Yeah, she's doing great and it's gotten
Very
better,
good.
but I first couple 3 days were pretty so just kind of a word to the wise. The drop off could get you, but it could also be the return trip home when you kind of see their car in the driveway or you walk into the room. And anyway,
Yeah.
how about you? What's the big thing you're celebrating?
You are putting me on the spot. I'm celebrating the fact that my wife has put up with me for 20 years.
God bless
Um,
her.
yeah. So, and actually 5 years of dating. So 25 years. I'm 43 years old. I've been with her like 60% of my life.
That's awesome.
I know nothing else. She's my high school sweetheart. When you find the right one, you just find the right one, no
Yeah.
matter when it is in life. And so, yeah, 20 years of marriage. So I was telling you before we started, it's the longest I've ever done anything in my entire life. Pretty good.
Congratulations. Keep doing what you're doing. She's a wonderful person and
Yeah.
wish you guys all the best.
Appreciate that. I appreciate that. If this is your first ever monthly market commentary, we don't just talk about our personal lives. We actually do get into the markets. And so we always do 3 points: a look back at the previous month, a look forward at the month coming up, and then just a fun data point worth discussing. And so let's just jump into it here, Tim. I'll look back at the previous
Yep.
month, which was August. I'm calling this point, is this reality TV or is it politics? Talk a little bit about the Fed here, because
Yep.
obviously we've had an administration, specifically Trump himself, calling for Powell's head, and then trying to fire another member of the Fed, Governor Lisa Cook. Obviously, a little play on The Apprentice there. You're
Yep. I
fired.
saw it.
You
I
see, I'm
caught
doing.
it.
Make sure everybody else is following along. I knew you had it.
I'm
You're really
older.
good. Actually, let me reverse that. Our listeners are really as far as you. I was worried about that.
Good
Um,
catch.
But the bottom line is there's obviously some tension between this administration and the Fed. And so that's led to a lot of conversation, discussion around the independence of the Fed, or does Trump even have the power to fire Powell? And just concerns about the Fed's ability to maintain any semblance of control here. So can we just talk a little bit about that?
Yeah.
Like, talk about the the legality, like specifically between the Fed and our executive branch, and what Trump can and cannot do, and why we've kind of set the Fed up meant to be an independent third party.
Yeah, no, it's a timely issue for sure. To your point, most of the back and forth or the White House's attention, anger has been directed at Jay Powell and his unwillingness to cut rates this year, too late Powell, and some other things that the president has said about him.
Yeah.
And then this Governor Lisa Cook news sort of caught, I think, a lot of folks by surprise. So, at the risk of getting too far into the weeds, there are 7 folks that make up the Federal Reserve Board of Governors. Those 7 folks all serve on the committee that sets monetary policy, cutting rates, raising rates. They're not the only ones, but those 7 folks are arguably the most important people at the Fed. Jay Powell is one of the 7. His term is up May of next year. by all accounts, Donald Trump will not reappoint him. He will move on, and that will create an opening. In the meantime, of the 7 folks there, Donald Trump has appointed 2. There's a vacancy that he's nominated someone to fill, and then if he can fire Lisa Cook for cause, and she's fighting the effort, all of a sudden he'll have 4 of 7 on the board of governors. Now, that doesn't mean he can drive that monetary policy will shift one way or the other, but in effect, Donald Trump will have appointed 4 of 7 of the board of governors. In effect, at least, if not giving him control of the Fed, which I don't think would happen, having a greater amount of influence. So we'll see. Governor Cook has promised to fight this. Our best guess is this will work its way through the courts up to the Supreme Court. And
Yeah.
while we're no constitutional scholars, based on a recent decision from the Supreme Court's last term, this case Humphrey's Executor, where they essentially said the president could fire members of certain regulatory boards, even if their terms weren't up. Interestingly enough, the Supreme Court took its time and took the time to talk about the Fed as a quasi-private public institution. And the Fed is different than, say, the National Labor Relations Board. So if I was a betting person and this case did make its way through the court, I would think the Supreme Court would say that Donald Trump does not have the right to fire Jay Powell except for cause, or Governor Cook except for cause. And I know they're trying to make the case that, I guess, mortgage fraud is what they're accusing her of, would constitute cause. But again, I'm no attorney.
Yeah.
There's been no adjudication of the cause. She hasn't been formally charged with anything. So if I was a betting person, the Supreme Court would say, no, you can't do this. And then finally, to your point, if you look around the world, if you look through economic history, every central bank was independent and then came under the influence of political forces, it usually doesn't end well, because most of those political forces, understandably so, want lower interest rates, lower borrowing costs. They want to stimulate the economy. That can be good in the near term, but it tends to lead to very difficult times down the road in terms of inflation and the value of a currency. Donald Trump is not the first president to advocate for lower rates or to pressure the Fed, but you could argue he's doing it in the most public way, explicit way. And I do think the effort to remove Governor Cook is the first time since the Federal Reserve Act of 1913 that created the Fed where a president has tried to remove a Fed governor. So we are sort of in uncharted territory, but if I was a betting person, I would think he wouldn't be successful.
Yeah, there's a lot there. Number one, $5 word, adjudication. Love that.
Thanks.
Snuck that one in there.
Yeah.
Number two, it's an interesting dynamic, right? Because you sit there and talk about how there's supposed to be an independent board, yet talking openly about how Trump gets to place certain people and how that's not necessarily supposed to impact how these people vote or their thought process. Yet we all kind of know it does, kind of like the Supreme Court, right?
Yeah.
Again, supposed to be independent and simply upholding the Constitution, but to say that there isn't some sort of political bent or leaning with every one of the justices is hard. And so it's going to be interesting to see how it plays out. I completely agree. That being said, the good news is we do have a court system that this has to go through. And whether you agree or disagree with what Trump is trying to do, Ms. Cook has the opportunity to defend herself, and we're just going to have to see how this plays out. But very interesting last month.
Oh, for sure.
As that relates. And that brings us to this look ahead, which we're sticking with a similar topic here, or the same topic, however you want to put it. But I'm calling this point cut to the chase.
Yeah.
We've been waiting, and finally, in the last meeting that the Fed had out in Jackson Hole, Wyoming, they finally alluded to the fact that we're going to have rate cuts in September. Everybody kind of thought maybe a quarter point is what we were expecting, but then we were waiting on this jobs report. So I want to talk a little bit about that, because that has now come out as of a couple of days ago. And then we've also got another interesting piece of paper going to land on the CPI here in a couple of days. And so talk to me about what your expectations are, just kind of what the expectations are on Wall Street of what the Fed is in fact going to do on the 17th.
Yeah, our 2 cents, our point of view lines up with, I think, where most folks in our industry are today, which is the Fed's going to cut 25 basis points on September 17th. I think even if you get a shockingly bad consumer price index print on the 11th, really sort of a really unpleasant inflation data point, I think the Fed's going to look past it and they're going to cut rates, because to your point, the August jobs report, the August unemployment rate, both worse than expected. And now if you look at the last 4 months of labor market data, it's much more bad news than good. And I think the Fed thought about cutting in July. They didn't. They teed up a cut at the Jackson Hole Economic Symposium. And I think they're going to go ahead on the 17th. Some folks are expecting a 50 basis point or half a point percentage cut. I think you only get that if you get a shockingly weak consumer price index data point and inflation is not even an issue at all, which I don't think will happen. So I think they cut 25, and I think people expect them to cut another 25 to 50 basis points before the year is out. And I think the Fed, justifiably so, is really worried about the labor market. The last couple four prints just don't look good. And
Yep.
if the jobs market is going in the wrong direction, then they're really worried about the consumer. If they're worried about the consumer, then they're worried about the economy.
Yeah. So that being said, that's all on the kind of this backdrop of historically September, not a great month
Yeah.
anyway.
No, no, historically, if you go back almost 100 years, 1928, I think the average return for the S&P 500 is negative 1.2%. It's closed to the downside about 60% of the time. So even though at the risk of, jinxing anything, if you think most folks think October, Halloween, the 29 crash, the 87 crash, October is usually fine. September is the one month out of the year that's produced a negative return going back a long, long ways. We're off to actually a pretty good start
Yeah.
month to date. So more green than red. But so all that together, taken together, wouldn't be surprised to see some volatility this month. The uncertainty around the Fed, concerns about the labor market. September, its historic weakness, but we'll have to see how the next couple
Yep.
3 weeks play out.
Great segue into the data point worth discussing, which I'm just calling JOB, the
Yeah,
classic, because it's all about jobs right now. I
yeah,
feel like a couple of years ago when we were doing these monthly market commentaries, we talked a lot about jobs, and then they
yeah.
kind of, as a headline, they went away for a very long time, and now they're back. We talked, about the possibility of rate cuts and the fact that we got a jobs report a couple of days ago. It wasn't great.
No,
And so talk to us a little bit about that most recent jobs report and kind of the data coming out right now and kind of what that means. We've got a JOLTS survey. We
yeah,
used to talk about the JOLTS
yeah,
survey. And
all the
so
time.
a
Yeah.
quick reminder to our listeners of what that even is. Just kind of paint the picture of what's going on from a jobs perspective.
Yeah. So again, sort of stating the obvious, 70% of the economy is consumption driven. So if the consumer's
Yep.
okay, the economy's okay. If the jobs market is okay, the consumer's okay. And it's such a massive economy. And there have been some legitimate concerns around the veracity of the data. Survey response rates are down. That's how the unemployment numbers get collected. But,
Yeah.
in August, we added 22,000 jobs. The unemployment rate ticked up to 4.3%. You can kind of look past one or two data points, but if you think about a more holistic view of the labor market, and you talked about the JOLTS report, all of it kind of points to a great moderation, if not weakening. So the JOLTS report is a job opening labor turnover survey, and essentially looks at number of job openings. And then obviously you look at the number of unemployed Americans. And for the first time in 4 years, we have fewer openings than we do have folks looking for work. We had a ton of openings during the pandemic when people were afraid to go back to work. That number finally came back into equilibrium and then dipped below. That's not
Yeah.
good. And then a lot of folks look at unemployment claims week to week, how many people have lost a job and are filing for unemployment insurance for the first time. Those numbers have been okay, but the continuing claims, the folks that continue to remain on unemployment insurance, that's at a 3 year. So I don't think that the economy is on the verge of rolling over, that recession or anything like that is preordained. But the Fed, which is concerned about inflation and employment, is now really pivoting to the employment side of the dual mandate. They need to, and that's why I think they're cutting rates in September. And they're just going to hope that maybe the weakness of the last 3-4 months stems from tariff uncertainty, maybe a couple one-off headwinds that are dissipating, and we're going to go through a slowdown without having to deal with anything more pernicious. I think if that's what they're thinking, they're probably right. But they know, I think, that it's time to cut, and I think they're going to do that on the 17th.
Yeah. Yeah. Another $5 word in there too, man. You're just rocking pernicious.
Yeah.
That's,
A lot of
man,
coffee today. Went to bed early last night.
I'm gonna have to write that one down and get that one looped into my vernacular. That was good. Uh,
Thank you. I appreciate it.
that being said, like this,
Yeah.
I mean, this is the one that hits home the most of all the things that people, we talk about the Fed a lot. We talk about a lot of like Wall Street kind of driven stuff. But to your
Yeah.
point, 70% of our economy is consumer driven. And not only that, this is us, right? This is what
Yeah.
we deal
This
with
is us.
every day. And you and I were talking prior to hitting the record button about anecdotal stories of people that and I know people as well, that it just seems that while maybe they could make the argument that the survey data is worse because
Mhm.
less people are responding, I'm hearing more and more stories of people not being able to find jobs or,
Yeah.
when you were talking about kids coming out of school having a hard time finding jobs and things of that nature. So it seems as though this is true.
Yeah.
That being said, I do want to back off like the, you know, chicken little sky is falling type thing
Yeah.
because there's always headwinds. It's never
Always.
all good, right?
Yep.
And so just because there's a headwind now or coming or it might even get worse that our economy has to face doesn't mean that there's also not tailwinds
Yeah.
that we have at the same time and that we can't overcome these
Yep.
headwinds. And so as an investor in the short term, should you be doing anything different? I don't think so, not
Yeah.
necessarily. I do think that prior to rate cuts, as a retiree, if interest rates are a part of your portfolio relative to the income that it's providing to you, it is something to be cognizant of, right? And it is something that we're watching, especially if you've got kind of income laddered out. There might be some changes coming, but outside of that, we're still long term minded. And
Yeah.
there's nothing that's going on today from a tailwinds or headwinds perspective, or any of these headlines that change that macro dynamic of our economy. And so
Yeah. I
I
would
just
agree.
want to give people a little bit of you know, a rah rah.
Yeah. And if you're looking, and again, to your point, there's always good and there's always bad. I could be misquoting this, but I think the 30-year fixed mortgage rate had its biggest one-day drop in X number of months last week, right? And so
Yep.
one thing, again, I don't want to see the labor market weaken. I don't want to see people struggle to find a job or lose a job. That's a terribly difficult thing to deal with. But one thing I take comfort in is, okay, so the jobs market is, by all accounts, moderating, weakening. The world expects the Fed to cut. Bonds are rallying, rates are falling, so that means people are pricing in a rate cut, and they're comfortable sort of expressing that point of view by buying U.S. government bills, notes, and bonds. So that's a vote of
Yeah.
confidence in the government. And if there's one part of the economy that's done a whole lot of nothing for a long time, it's housing. And if folks I've talked to who know that industry better than I do have all said, if you can get that 30-year fixed mortgage rate closer to 6 or even a little bit below, that's just going to start to unlock. So there is an upside to a weakening jobs market. It's lower interest rates, lower borrowing costs, and hopefully, boy, you talk about the next leg for the economic expansion. If housing could get going, that would be a massive tailwind, and maybe we're getting closer to that happening.
Yeah, it's a really good point. I mean, the market's been doing what it's done for the last couple of years in spite of this
Yeah.
massive headwind in the housing market. So, Tim, it's always great to have you. It's always fun to have these conversations. And hopefully, if you're listening, if it does anything, we just want to let you know this is our opportunity for 10, 15 minutes to kind of let you know, look, we're on it, we're paying attention. And although some of the stuff seems very, very micro, most of the planning we're doing is on a very macro scale. And although there are little opportunities for rebalancing and opportunities for income distribution portfolios and things like that, the fundamentals of the plans that we're putting in place aren't being shifted by a month over month type data. So that being said, Tim, hopefully over the next couple of weeks, as you do the first time I did this with my daughter at school, and the first time I do that, and notice she's not here, the tears don't completely intrude
Yeah.
on your day today.
It's got a little
Um,
bit better. And we're going to go up to Boston in a couple weeks for Parents Weekend. So I'm really excited. I can't wait to see
yeah,
her.
that sounds awesome. It's going to be a lot of fun. Tim, appreciate you being here. It's going to be a very
Yeah.
interesting conversation in October
Yeah.
to see what actually plays out next week with the Fed. There's just a lot going on right now.
A
So
lot going on.
I'm already anticipating the October monthly market commentary.
I look forward to it.
All right. Good to see you, Tim.
Good to see you. Take care.
All right. Thanks, everybody, for listening to this month's monthly market commentary. If you want any more information about Fiat, you can head to our website, fiatwm.com. Not only can you find more information about the firm, but education is our passion. There's new content being put out every single week, educational content where we try to use that education to better your life in a meaningful way. So go ahead and check that out as well. And we'll see all of you back in October.